is Alex with MasterChartsTrading.com. This is market recap for Friday, January 8th, 2016. This was quite a week for various stock indices, and SPY S&P 500 closed below December lows on a very broad sell-off. Also, some history buffs will note that this first 5 trading days of the year were the worst, seen the worst performance for Dow Jones Industrial Average since its inception in 1885. Also, many of the broad market ETFs such as IWM, which is small caps, the home builders, the energy, the emerging markets, and even the New York Stock Exchange Composite are at or trading below their 52-week lows. And then, of course, as bonds maintaining the market leadership as a result of all of this. The dollar is poised to challenge 52-week highs again, and gold and gold miners may have a little bit of juice left in this bounce. We'll look at those. Oil hit multi-year lows again, while the USO, the oil ETF, is at all-time lows. We'll compare those two. And finally, we'll finish off with a bear market rally in natural gas. All right, let's start off with S&P 500 ETF SPY. So as you can see, this was a pretty dramatic week and the start of the year, for that matter. So the most, opening here we see on first trading day of this year, we had a very large gap down here from the 31st of December, and then a hammer-like candlestick, and many people thought this was that was it for trade, but that was it for selling, and we actually had a kind of a rebound next day, but this really large gap still remains to be filled. So possibly sometime in the future it will S&P 500 will attempt to fill it, but then again we don't know at what point. This could be next week, or it could be in 5 years. We don't know when this gap will be filled. For what I see right now is that this gap from October gap up was filled this Thursday. Also Friday we had a very positive and upbeat jobs report that was completely ignored pretty much, and selling continued almost to the end of the trading day. So overall, some history people will tell you that this first 5 trading days were the worst ever. And just think about that. Dow Jones Industrial Average, correlates really highly to S&P 500. So it goes back to 1885, and this first 5 trading days in 2016 were the worst ever as far as returns are concerned. So that's just something to keep in mind. And this was even worse than during the Great Depression, etc. Moving on to the on balance volume indicator, very useful indicator in my opinion. So you can see that actually we see a lower low here already. It's below this low and this low from August and September. So what does it mean is this is a bearish divergence. We see a lower low in the volume indicator, and we still have a higher low in the actual index. What this is telling me is that the volume that's leading to the downside, there was more volume during the down days, basically. So this is usually not a good indication, and usually not a good indicator, and I think this could be a leading indicator, and most likely we will get a retest of at least September lows, most likely August lows. And if we do close below August lows, that will be a 52-week low. So if we get a 52-week low, that would imply to many trade following systems that we are indeed in a bear market, and so most likely more selling will follow. Some of the other indicators I follow, S&P 500 new highs, new lows, you can see they're clearly very strong selling, lots of new lows. Breadth momentum, of course, also is in the negative territory. Actually, back here in September, if you watch some of my previous videos, read some of my blogs, I pointed out that this upswing will need to be, so to speak, tested again. And here we go. We are being, this upswing in breadth is being retested again. And then finally on this chart we have the advanced decline volume line that also hit a low for the move. So again, we got two indicators here that are already hitting lows before the actual index hit the lows. Let's zoom out a little bit to S&P 500, same chart, but on a longer time scale. This is 11 months chart. So this is actual S&P 500 index. So we have a close below, there were several supports broken here, and then continuation lower. So we're really getting pretty close to the August and September lows. Now, we are somewhat oversold. See here, for example, this is a percentage of stocks above the 20 EMA, 50 EMA, and 200 EMA. So we're going to get into that territory where we're getting somewhat oversold, especially a percentage of stocks above the 50-day EMA. It's only at 12%. So we could see a bounce, and it would not be out of the question for a bounce to take it back to the broken support, possibly even higher to maybe this broken support. But again, I think this is going to be a opportunity for short sellers to get short, versus a opportunity for bulls to get long. So, if there's going to be any bounce, I think it will get shorted. So next we'll look at some of the other indices that I don't normally follow, but it's kind of interesting to look at them too. All right, next let's look at IWM, the Russell 2000 Small Cap ETF. This ETF is much weaker than the S&P 500, whereas S&P 500 came almost all the way up to the all-time highs that it hit back in July, I think, of last year. IWM actually didn't even come close and was rejected here at the 200-day moving average. This is a bearish engulfing pattern right there, and then a continuation lower. We had several support breaks, and finally today we had a 52-week low, and actually this is a closing 52-week low, so this is not a good sign. Also, I want to point out this advanced decline volume rather. You can see that it hit a low for the move here, but the index didn't hit low until today. So that was like a leading indicator. And also you can see the unbalanced volume is trending lower as well. Next, let's look at XHB, which is Home Builders Index ETF. Also a 52-week low here. This is a very economically sensitive group of stocks, and if we're hitting 52-week lows, that means something is not 100% with the economy. So again, something to think about as far as global and macroeconomic picture. As far as technical picture is pretty clear. This is a 52-week low, so any rebound in my mind should be shorted until, of course, there's a turnaround, and in that case, we will look for buying opportunities. Next is energy ETF XLE, the weakest of the major sector ETFs. So I pointed out this head and shoulders pattern and this support break. So you can see we can do a measured move, and this was about $6.40. And let's see, it basically played out around here. So this head and shoulder kind of played out around here, but looks like we have a support break again in multi-year low. So I think what's going to happen is this entire pattern is kind of like a cup and handle, maybe like that. Maybe this whole cup and handle will be duplicated on the downside. So if we have this full pattern, this is another $11, $12 down. So it looks like we have a target of 56, so about $45 possibly down $45. That's a target on the downside. So that's another 12, about 17-20%. That's at the very least, and this is a cup and handle target, so to speak. And then finally, one of the other ones I don't normally look at, but this is just a really telling sign. Also, emerging markets, very broadly, widely traded ETF. Again, also at multi-year lows. So this could be also a kind of like a goofy looking cup and handle. So again, if this thing gets duplicated on the downside, we can see significantly more downside for emerging markets. And then finally, the biggest one that I really pay attention to is New York Stock Exchange Composite Index. And this one is, it really worried me way back here, actually, when we started making, well, actually, I got really worried around here when my indicators turned bearish outright. So today we got a multi-year closing low on Friday. Technically, we haven't hit the multi-year lows because this was a 52-week, I think this was 52-week low. But in any case, if we already got a multi-year closing low, and we've been trending down with advanced decline lines, advanced decline volume lines, and you can see that also a new low and advanced decline line several days before we hit multi-year lows here. As far as percentage of stocks above the 200-day moving average, I kept pointing this out as well in my previous videos. You can see that they were barely above 40%. They were not even above 50%. So very few stocks within the index were really, doing anything to push the index higher. So now we are back down to 20%. So only 20% of stocks are trading above this green line, the 200-day moving average. So generally speaking, not a good sign. And this also could be like a cup and handle. So if this is a cup and handle, just do a quick measure move. Now, of course, none of this is a guarantee, but it's kind of like a good thing, good idea to keep in mind. If this is going to be a downside, looks like we got another 9% down, about 10% down. So this could be, another 10% down from here, which would put the index around 8,500 or so. All right, next we're gonna look at the bonds. Okay, so this is TLT, the long treasury bond fund. So kind of messy chart. You can see it jumps around a lot, but the general gist of the matter is basically we held support here. So this is December rate hike right here. We kind of dropped down, but really we held support and then we rebounded from it. I think this was also a breakout. We kind of moved back and forth here, but the point is that really bond funds are now market leaders. You can see compared to all other funds, ETFs that are not leveraged and not inverse, TLT is actually one of the market leaders, and this is telling something about the state of the market if bonds are outperforming stocks. If stocks collapse from here, TLT will most likely have a huge spike. Again, I don't know, how far, etc. But in the past, when stocks sold off, and they usually sell off really sharply, TLT usually spikes really quickly, just within a couple of days, and it's just off to the races, kind of like that, maybe, this kind of move. So, anything is possible, but if my predictions are correct, I think TLT will benefit if stocks continue to come under selling pressure. Here's another one interesting, is on balance volume. You can see it's pushing higher and higher and higher, while TLT itself is actually kind of trading sideways. And this is already a higher high in on balance volume, while TLT has not yet made a higher high. So this is showing that there is accumulation and investors are positioning themselves into bonds. Next, let's look at municipal bonds, MUB, and this is another all-time high. This was a very strong move here, really, from November lows and just continued non-stop. See how it became overbought here? It's just overbought, and then it became even more overbought, and it just continued to be overbought. So, sometimes people say, well, overbought means it's gonna drop. No, and in a bullish security, I try not to even look for tops. I just try to, go with the float. So if we have a bullish security, I'm not gonna look for a top in pattern. I'm going to look for buying opportunities within a bigger uptrend. And then finally, let's look at even the short side of the spectrum. This is a Vanguard short-term bonds. So this is a very, very conservative investment. If people are buying short-term bonds, that means they're very scared. And look, even during the December rate hike, looks like we held support more or less. This was support. And then we rebounded. Now we're already moving higher and above this December highs. And again, same thing with short-term bonds. They're market leaders. So this is really telling. If money is rotating not only into long bonds but even into short-term bonds, that's, in my opinion, not a good sign for the stock market. All right, next we're gonna look at the various at the currency at the US dollar and go into the commodities part of the presentation. Very briefly, this is US dollar index. So this is Mario Draghi's speech here. Kind of was bearish for the dollar, bullish for the euro for a little while, but I think with the support here that 97 area held, and we rebounded in this kind of zigzag fashion up. Generally speaking, this is a 52-week highs here, so I think we're really gaining into 52-week highs. So this is a bullish chart to me. So if I was trading this chart, I would be looking only for buying opportunities. I would not be looking for shorting opportunities here. Again, something interesting. This is UUP, the Stock Charts Technical Rank for United States dollar bullish fund, also in the top performing section of the fund. So, we got bonds and currencies that are outperforming stocks. That's not a good relationship to have if you're a stock bull. All right, that's all about the US dollar. All right, gold. This is spot price daily chart of gold. So we had basically we had multi-year lows here. So something kind of not 100% that I was kind of surprised a little bit, I guess, is what I'm trying to say. I was expecting this kind of cup and handle pattern, this whole thing here, to play out to the downside and to continue down to maybe $1,000 area. But here we kind of held on and we rebounded, and now we're trading above this red line, which is a 50-day moving average. So to me, this gold is still very much bearish, and I would be looking for shorting opportunities still. But it's kind of interesting that now we have dollar and gold moving together up. So maybe gold is again, becoming this safe haven kind of asset, and maybe instead of positioning people are positioning into gold. Investors are positioning themselves into gold in addition to currencies and bonds. That's a possibility. Certainly, I'm going to certainly entertain a possibility, but I want to see at the very least a breakout maybe above here and a continuation higher without significant selling, or at the very least rejection of the selling attempts. For now, looks like, see this big volume by price bar. Looks like gold closed above it, so that's a good sign if you're a gold bull. Next resistance area, of course, is around here at 1140, and there is also a high volume by price bar coming in here at 1150, 1160. So if we don't fail right now, I think the next place to look for failure would be around here, and there was the same thing kind of here. And this actually was repeated several times already. Gold kind of pops above the 200-day moving average and then just gets sold. So could it be the same thing this time? Possibly. We'll see. Again, I'm not trying to pick bottoms. If you are lucky enough to buy right here at 1045, good for you. I'm thinking this is a bearish security, so I'm looking for bearish setups. I'm not looking to go long just yet, but maybe one day we will. Next, let's look at GDX. Before we continue to GDX, I want to show another chart of gold. This is gold spot price weekly chart, and this is going back all the way to 2012. You can see that basically the bear market started around here, and we just continued making lower highs and lower lows. So this is the bear market as it stands. Basically, we continue making lower highs and lower lows. At this point of the game, I still think we're in a bear market. We'll need to see some significant buying pressure again. At the very least, I want to see breakout and close above 1200, and then a support held on retest. So we need to see a breakout, a pullback, and a continuation higher. So far, I have not seen any of this anywhere here. See, this rebound attempt was stopped short as well. So for now, gold, I think, is still in a bear market, and when it becomes, we will basically continue shorting the rallies until it stops working, and we'll then start looking for buying opportunities. So next, let's look at GDX. All right, GDX, Market Vector Gold Miners ETF daily chart. As you can see, it's really choppy. This chart is really choppy, and it just jumps around a lot. There are lots of gaps everywhere. So this is a very volatile security, and it's difficult to trade. Anyways, we held support in the $13 area. This was kind of interesting area because it kind of continued acting as support for quite a while, and then we rebounded here. Here we had, I pointed this out, we had a lower low here, but we had a bullish divergence with advanced decline volume, advanced decline line, and on balance volumes breaking out above the December highs, their corresponding December highs, while the index itself has not yet broken out. So this is a bullish divergence that actually played out, and we can see now that GDX is trading above the December highs. So this divergence actually worked out. It doesn't always work out, but it does work out occasionally. Now, this was a high volume resistance area, so we broke above it. That's a good sign for the GDX bulls. Of course, next resistance area is this 200-day moving average, and this peak at 1690. So this is a very important area. If we do come up here to 1690, most likely the shorts will come in and try to push the prices lower. This will be an important test. If the shorts succeed, then we're going to continue lower again. But if the shorts fail, then we actually might have a genuine breakout on our hands. For now, I'm treating this as a bearish security, and I'm still looking for shorting opportunities. All right, next we're going to look at oil. All right, this is a West Texas Intermediate light crude oil spot price daily chart. Several weeks ago, I pointed out this rising wedge formation on this chart, and looks like it actually played out. This is a classic kind of breakdown and a continuation lower. So I think this, as far as the actual bearish wedge, I think it already played out with this low. But the bigger picture, I think this whole thing still needs to be duplicated on the downside. So I'll show again with a measured move targets. If we measure from about here, that's about $10 down from the breakout level. So we need to see another $4 or maybe even more down. So yeah, like I kept saying, we may see oil trading in the upper 20s before some sort of a substantial rebound will materialize. Again, I don't exactly know where or when that will happen because some people ask me with the same question of, can I play options on this? And I'm like, you can, but I don't know exactly when or where this will happen. So I know that right now it's very much bearish, and we had actually an open position here. My subscribers got a alert here, and this to buy SCO, short crude oil, and this position is actually up 100% right now. So that's please consider signing up when you get a chance. Next, I want to show USO, which is a corresponding ETF to oil, and whereas WTIC hit multi-year lows, USO actually hit all-time lows. And these two ETFs, they kind of track each other, but then again, they don't really, or rather, USO doesn't really track the actual spot price of oil, because this is put together with futures contracts. So if you're trying to invest something long-term in USO, that is probably a bad idea because this ETF does not track well the underlying security. This is okay for trading. You can see it's traded very highly. 44 million shares were traded. But as far as long-term investment, this is probably not a good idea. All right, and this is natural gas daily spot price too. Also, okay, again, multi-year lows here. Then a very strong short cover and rally off of this multi-year lows. So looks like natural gas was able to break above and close above $2.48. So this was able to close above this peak here, and also this area here is kind of like a high volume area, so it was able to clear this area. So still very much bearish. I mean, you can't get any more bearish than multi-year lows, but natural gas is very volatile, so just something to keep in mind. And it is definitely difficult to trade it, but not impossible. So next level of resistance, of course, would be the 200-day moving average and this level of high volume area. So about $2.60, $2.70. If it does fail, this would be a good place to do so. Again, not looking to go long. If you were trying to pick bottoms, and I showed this several times in the past, after this breakdown here, there were several hammer-like candlesticks, but only one of them worked out, and these three did not work out. 1, 2, 3 hammer candles. So if you were trying to pick this button, you would have been, wiped out 3 times already. So again, in a trend trading, I'm not really trying to pick any bottoms. All right. Next, stay tuned, please, and that's it for this week's recap. Please stay tuned for information of how to find us on the internet. Thanks for watching. Have another great trading week. Bye-bye. Okay, I also want to show you how to find us on the internet, so please go to MasterChartsTrading.com. We do have trade alert services which are live right now, and it's only $24.95 per month with a 3-week free trial. I think it's well worth the money, and you get timely alerts on when I go short or long, whatever various securities. So I think this is a great value, and my clients have been pretty happy about them so far. We also have a blog here where this information that you're watching will be posted. Also, video section, same thing. You will see the information there as well. If you go to public charts and social page, you will see that we have this link here, public charts page, and this link will open and show the charts that you saw in this video. If you sign up for our mailing list, you get a special discounted price for our trade alert services. If you have Twitter, Facebook, YouTube, or StockTwits accounts, please follow us there as well. That's it for this week's recap. Thanks for watching and have another great trading week. Bye-bye.